Yeah, hello and welcome to another update video about Bitcoin. So in this video, we want to take a look at the updated Bitcoin chart. Yeah, quite a few things have happened since the last video, and I would like to make you aware of the things that we talked about in the previous video. So I'll show you a quick snippet of the previous video from like 5 or 6 hours ago when we were at 29.4K. And then we take a look at how the chart actually evolved. Basement level. It hasn't been reached quite yet. So my primary expectation would actually be that we go a little bit higher here, maybe to 30.1K. Yeah, the 38.2% fib level would be the ideal retracement for such a wave 4. Okay, so let's actually take a look at what actually happened. So yeah, we came exactly to that level. We currently are exactly at that level that I gave you in the last video. So 30.1K pretty much worked out until now. So everybody who listened, yeah, that was the primary expectation and it has worked out. Yeah, which is good because we came exactly to that 30.1K level, which is the 38.2% Fibonacci retracement level. If I do it a bit more accurately, but it doesn't change a lot. So this is now important, and a wave 4. So I can currently still count this here as a wave 4. Yeah, and this is actually what we would expect from a wave 4. That is why I highlighted it as primary expectation, that we move to the 38.2% Fibonacci retracement level. What would need to happen here is now a bearish reaction. If this bearish reaction does not occur, then the next likely resistance will be at 30.46K. That is the 50% Fibonacci retracement level. If we break above that, further upside expected, because then we are looking here at something where we cannot say with a high likelihood that this is still this scenario. Then we will need to look at something different. And I'm very honest with you, I need to think about how that would work, what we would be seeing then. There are possibilities. We could, for example, then, and that will get very likely above the 50% Fibonacci retracement level at 30.46K. It would not strictly invalidate this. You know, this technically the wave 4 can go all the way up to the wave 1, yeah, which is at 31K, but it's just very unrealistic. That would be a way too much of a retracement for a wave 4, and therefore I'm looking then at something different. And I'm very honest with you, what that could then be is just an extension of the wave 2. Yeah, it could then be an extension of the wave 2, that the wave 2 hasn't been finished yet, and then we just have to delay the sell-off, unfortunately, a little bit. So these are the two key levels I'm currently watching out for. We currently actually 3164, look at this, 30,164, exactly here where the 38.2% fib level actually is. Quite funny. So the bears and the bulls are currently fighting around that area. Absolutely. Here is where the sentiment shift normally would occur in a wave 4. But again, we can look at a wave 4 retracement to the 50% fib retracement at 30.4K. If it goes above that, it would need to be something different. I would probably label it then in a way that I did it on the ADA chart. The alternative would be a W X. No, wrong. Do that again. So obviously this is a wave 2, so the wave 1 is fine. That was impulsive. That this here was only the wave W, that this was the wave X, and there will be one more wave Y. To be honest, that should not go above 32.4K anyway. So the wave Y, yes, it can move higher here. It needs to move actually higher than the wave W, ideally. But there isn't much more space. When it moves above it, it can nearly already stop. So this would then be the alternative, and I would just move the wave 2. The wave 2 over. Yeah, this is then what is getting likely. So we know until we break a certain fib level, that is currently here still the most likely wave count. If we go above that, higher price levels will be unlocked in the region above 31.7K. Yeah, and before then, however, at the peak of the wave Y, here somewhere in this region between 31.7K and 32.4K, we would then expect the reversal with the highest probability. And therefore, this is now really what we need to watch out for. I think the 50% fib level can be reached, certainly, and then I would expect the move down in the wave 5. But if we move above that, then I gave you the next target for that. So overall, what I need to tell you here about Bitcoin in general, it doesn't really move a lot. Yeah, this is what we need to say and what we need to see as well. It is very, very much struggling to get into this target area here in yellow. We talked about that. That was for generally this wave 4 in red. Yeah, and it is not absolutely impossible that we are still in this wave 4. Yeah, it is not impossible. But it did reach its target area for the wave 4 here. Yeah, so that was all done. Yeah, happy with that. Again, this is the target area for a wave 4, and it is normally located between the 38.2% Fib level and the 50% Fibonacci retracement level. And we can look at that here on the chart. Yeah, you can see that here between 32.1 and 34.2K. This is the area with the highest likelihood where we expected the wave 4 to get into. It did get into it, but it didn't even get into it very much. It only, bounced off pretty much at the low. And it just shows the weakness in the Bitcoin chart at the moment. And to be honest, the longer this sideways move takes, in my opinion, it just makes it much more likely that this is not a breakout scenario, because a lot of people still say the low is already in. I cannot see it. And even if we move up from here, it will, in my opinion, be sold off again. It will be sold out again. This is not a structure from which you would build new all-time highs on. Very, very clearly. It does not make a breakout impossible. We will find a way to count this as a breakout scenario if we have to, if it moves significantly above 34.4K, because then it would move out of the wave 4 target area here, and it would just make it unlikely that this here still is a wave 4, and we would then look at something different and possibly a bullish breakout. But with this structure here, I would get a headache. It would not be anything where I would think that we are building a sustainable all-time high on. There are possibilities where we break out and we will come down again. This is possible, but only above this level, 34.3K, 34.2K. It is a bit similar to what we had back here. Let me just find that structure here. I remember back in September, we talked about exactly this. Not a lot of people watched the channel back then. We talked about this horrible structure, and I raised my serious concerns about this structure here. And I told you that this does not look like a structure on which you would build sustainable all-time highs on. And you can see it wasn't. And basically that dark projection played out already here, because yes, we had a bit of a run to the upper way, quite a significant run, but we did not build a sustainable all-time high on. It was all sold off again. So do we want that? I don't think so. We want something where we can build a new all-time high on. Now, this just shows the importance of the structure, of the underlying structure. And what would be a possible scenario, certainly, if we break out with such a structure that, yeah, hey, we move higher, but it is all going to be sold off again. Would that be good? I don't want it, but it would be good for something. And this would be the monthly MACD. I mentioned that issue before. By the way, what we're currently seeing here is potentially a short signal on the monthly MACD. It's on the monthly ADX. Now you can see it's currently just being prevented, but if this crosses bearish, it would be only the second time in the Bitcoin history that this has ever crossed bearish, the ADX, which would be a short signal on the monthly. But anyway, it would be good for that MACD. Yeah, if we move up and then come down stronger again, because in my opinion, this monthly MACD is still way too high. Look at this monthly MACD line. It is just way too high. And this is basically the only thing that still gives me a real headache on the Bitcoin chart from an indicator point of view. And I raised it many months ago already, that the MACD on the monthly is just way too high, and that can create a problem when we move to new all-time highs, because it can mean that we will have a larger sell-off again, because that MACD is just too high and it has just its natural boundaries as well. But hey, this is the only thing that really annoys me from the indicator point of view. And just for that scenario to bring that down lower, we would either need a long bear market or we would need a move up and then a move down. Yeah. So basically a corrective move up, let's say, yeah, but then something where we would come down once more, maybe even lower. So something like that, like a fake out, then come down. Not below zero. Yeah, not that. Oh, anyway, that's what we're looking at. Yeah, so hopefully you understand the relevance of these two levels here that we look at on the 1 hour chart at the moment, which is here the 38.2% fib level and the 50% fib level of the current move. This is where it's going to be played out, which direction we're going to head. So here, high alert at the current level at 38.2% fib level, that high can be in. If we break it though, which I can't answer you now if we're going to do it or not, then next level 50% fib retracement, 30.5k. Here I would then, as a next likely scenario, expect the move down in a wave 5 here. If also this doesn't happen, then it's very likely that we get to around 31.75 to 32.4k, and that we then see something like that WXY pattern and an extended wave 2. These are the two key scenarios I'm looking at. And yeah, hopefully that makes things clear. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.